Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Transport International Holdings Limited Annual Report. Transport International Holdings Limited offers a diverse range of businesses and services. At the core of their operations are public transportation services, including franchised bus operation in Hong Kong and non-franchised services that cater to various groups such as business commuters, tourists, shoppers, students, residential estates, and schools through chartered hire services. In addition to these transportation services, the company also provides cross-boundary shuttle bus services between Lok Ma Chau, Hong Kong and Huanggang, Shenzhen. Furthermore, they offer car rental and taxi hire services for those in need of alternative modes of transportation. The Property Holdings and Development segment is another significant aspect of Transport International Holdings Limited's operations. This segment involves holding and developing non-residential properties, which not only generates revenue, but also supports the company's overall business strategy. Overall, Transport International Holdings Limited has diversified its portfolio to provide a comprehensive range of services that cater to various needs in Hong Kong and mainland China. Transport International Holdings Limited market capitalization of $6 billion is materially smaller than most of its industry peers of roughly $24 billion. Transport International Holdings Limited trades at a higher price-to-earnings ratio of 22 times and a lower price-to-book ratio of 0.34 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 30% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 7.42%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a review of key factors affecting bus companies' financial performance. Revenue growth is primarily driven by fare hikes and increases in ridership. A significant increase in fare revenue due to higher patronage has contributed to the overall revenue growth. Additionally, business expansion within the SBH Group has also led to a 4.1% revenue increase. Furthermore, an increase in bus patronage among Hong Kong residents has resulted in a 3.3% revenue increase for NHKB. On the other hand, revenue decline is largely attributed to a decrease in ridership and license fee income. A decline of 1.8% in passenger trips has negatively impacted revenue, while a decrease of 7.6% in license fees has also contributed to the decline. The financial performance of a company has shown significant improvement over the past year. A notable increase in net income was observed, rising by 112% from $187,282 to $398,022. This substantial growth is also reflected in the profit margins, which have seen a considerable expansion. The operating profit margin increased from 5% in 2024 to 9.1% in 2025, indicating that the company has become more efficient in its operations and better able to manage costs. Similarly, the net profit margin rose from 2.3% to 4.8%, demonstrating a significant improvement in the company's ability to generate profits from its sales. The increase in net income is consistent with the growth in profit margins, suggesting that the company has been successful in implementing strategies to improve its financial performance. However, it is worth noting that the magnitude of this increase varies across different sections of the report, with some showing a smaller rise in net income. Nonetheless, the overall trend indicates a positive shift in the company's financial health. The company's financial performance has shown a significant decrease in interest expenses over the past year. Initially, interest expense increased from $98,343 to $61,321, indicating an initial rise. However, this trend was reversed as interest expenses decreased by -50.3% from 2024 to 2025. Furthermore, finance costs also saw a substantial decline of $37 million during the same period. The decrease in interest expenses can be attributed to a reduction in average interest rates. The company's average interest rate dropped from 4.49% in 2024 to 2.95% in 2025. This decrease in interest rates has had a positive impact on the company's financials, resulting in lower finance costs. In addition to the decline in interest expenses, the company's total debt level also showed a significant reduction. Reportable segment liabilities decreased from $7,178,263 to $6,265,963, while net borrowing saw a 30% decrease to $591 million. These changes indicate that the company has made efforts to manage its debt levels and reduce its financial obligations. The company's performance across various segments has been mixed. On the positive side, the Property Holdings and Development segment saw an increase in reportable segment profit from $168,462 to $405,370. The Franchised Bus Operations segment also performed well, with a 3.5% rise in revenue and a significant jump in reportable segment profit from $16,924 to $167,278. In addition, the LWB segment experienced an increase of 11.7% in profit after taxation, amounting to $4.7 million. The non-franchised Transport Operations segment also saw a substantial rise in profit after taxation, with a 44.9% increase of $9.1 million. However, not all segments fared well. The remaining segments reported an increased loss, rising from $18,108 to $99,298. Furthermore, the Property Holdings and Development segment experienced a significant decrease in reportable segment profit due to changes in fair value of investment properties and underdevelopment investments. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases or sales of assets, businesses, or subsidiaries that would impact its financials or operations. This lack of activity suggests a stable and focused approach to business growth and development. The company has a history of paying dividends to its shareholders. In the recent year, it paid an interim dividend of 157,775 Hong Kong dollars per 1,000 shares at a rate of 0.3 Hong Kong dollars per share. Additionally, a proposed final dividend of 267,343 Hong Kong dollars per 1,000 shares at a rate of 0.5 Hong Kong dollars per share was also announced. The company has confirmed that it paid dividends in 2025 with an amount of $154,451,000 and a per-share payment of $0.50. This indicates that the company is committed to rewarding its shareholders through dividend payments. That concludes the financial summary for Transport International Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.